Welcome to Self-Tax YouTube channel. If you're an expat, business owner, or landlord and you're not subscribed yet, this channel is for you. We break down tax rules, deadlines, and changes clearly and simply. Hit subscribe and stay compliant without the stress. Before you file your self-assessment, you probably want to know one thing. How much tax will I need to pay? Most people wait until they reach the final page of the return, which can cause stress, surprises, and missed planning opportunities. In this video, I am going to show you a simple step-by-step method to estimate your 2026 tax bill before you file. Follow each step, and you will know your tax bill long before submitting anything. Before estimating your tax bill, gather the following information: your P60 or P45 if you are employed, your dividend statements, your bank interest summary, your rental income records if you are a landlord, your crypto or capital gains summary, your total self-employed income and expenses, any student loan information. Once you have these items, you can begin calculating your estimated tax bill accurately. Add up every source of income you received in the tax year. This includes employment income, self-employed income, dividends, bank interest, rental income, capital gains, online selling income if it exceeds the trading allowance. Once you total these amounts, you have your gross income for the year. For most people, the personal allowance in 2026 remains at $12,570. Subtract this from your total income. Next, consider any allowances that apply to your situation, such as the trading allowance, the property allowance, the savings allowance, the dividend allowance. The dividend allowance remains at $500 in 2026 and reduces the amount of dividend income you will pay tax on. After subtracting these allowances, you now have your taxable income. Now apply the correct tax rates to your taxable income. Basic rate income tax is 20%. Higher rate of income tax is 40%. Additional rate income tax is 45%. Dividend tax rates are different. 8.75% for basic rate, 33.75% for a higher rate, 39.35% for the additional rate. Savings income has its own tax-free allowance depending on your income band. Apply each rate to the correct portion of your income. This gives you your estimated tax due. Many people forget to include national insurance when estimating their tax bill. If you are employed, you pay Class 1 contributions, which appear on your payslips. If you are self-employed, you pay Class 2 national insurance if your profits exceed the threshold, Class 4 national insurance on profits above the lower and upper profit limits. Add these amounts to your estimated tax bill to get a complete picture. If you sold property, shares, crypto, or valuable assets, you may owe capital gains tax. The allowance for capital gains in 2026 remains at $3,000. Any gain above this allowance is taxable. The rates are 18% or 24% for individuals for most assets. Add this amount to your estimated bill. Many people do not realize how much capital gains can change their total tax due, so include this carefully. If you are self-employed and owe more than $1,000 in tax, you may need to make payments on account. This means you pay part of next year's tax bill in advance. Add this to your estimate so you are not surprised when filing. Payments on account are based on your current year's tax bill, so estimate them early. Add everything together: income tax, dividend tax, national insurance, capital gains tax, payments on account if they apply. The result is your estimated 2026 tax bill. This method gives you clarity early. You can budget properly, you can avoid surprises, and you can prepare before filing your return. Thanks for watching. Subscribe to Self-Tax for clear, practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.